Today, we're diving into a landmark event that has captivated the attention of investors worldwide, particularly those who have been following the journey of two specific currencies for years. This is a moment that signifies a major shift in the global financial landscape, as both the Iraqi Dinar and the Vietnamese Dong have officially launched their exchange rates for worldwide trading. It's an announcement that has created a significant buzz and represents a culmination of years of quiet anticipation among a dedicated group of currency holders. This development is not just a technical change. It represents a new level of legitimacy and integration into the global economy for both the dinar and the dong. For a long time, the Iraqi dinar and Vietnamese dong operated in the financial gray area, existing primarily within niche markets and accessible only through specialized dealers. They were largely disconnected from the mainstream global financial system, a world dominated by currencies like the US dollar, the euro, and the British pound. These currencies were often bought by individual investors on platforms that lacked the security and liquidity of traditional banking institutions. Now, with worldwide exchange rates officially live, these currencies are more accessible. This newfound accessibility allows for easier trading through conventional banks and financial institutions, which is a significant change that could lead to increased market participation and, in turn, enhanced liquidity for both currencies. The implications of this shift are profound for anyone with an interest in currency markets. Previously, investors faced a complex and often risky process to acquire or sell these currencies. The limited access meant that trading often involved high fees and a reliance on channels that were not always transparent. The new, globally recognized exchange rates paved the way for a more standardized and streamlined trading process. This change is poised to attract a broader range of participants, from seasoned currency traders to new investors, all of whom can now engage with these currencies through more secure and established financial networks, providing a greater sense of stability and confidence in the market. The Iraqi dinar, in particular, has long been a subject of interest due to Iraq's immense natural resources, most notably its vast oil reserves. The nation's economy is deeply intertwined with the global energy market, and as the country has worked to rebuild and stabilize its political and economic structures, many have watched for signs that its currency would appreciate in value. For years, investors held on to the dinar, viewing it as a long-term play on Iraq's eventual recovery and economic revitalization. They have monitored key indicators like infrastructure projects, political developments, and international relations, all of which are crucial to the dinar's performance. Today's announcement serves as a major validation for these long-term holders. Their patient observation and belief in Iraq's economic future now appear to be paying off as the dinar gains broader international recognition. This increased accessibility to global markets is not just a symbolic victory. It has practical implications. A wider pool of traders and investors could lead to greater trading volume, which in turn can contribute to price stability. For those who have been invested in Iraq's potential, this is a monumental moment that brings their years of patience to a thrilling and historic point. The dinar's journey from a niche asset to a globally recognized currency is a testament to the country's progress and its growing role in the international economy. The Vietnamese Dong story, while equally compelling, is rooted in a different narrative of growth. Vietnam has emerged as a powerhouse in Southeast Asia, becoming a central hub for manufacturing and exports. Its rapid economic development has attracted significant foreign investment from major international corporations, who rely on the country for production and trade. This influx of capital has put upward pressure on the dong, attracting investors who believe in the country's economic trajectory. Their investment in the dong has been a way of participating in Vietnam's expansion and its increasing global influence, essentially placing a bet on the country's continued success in the global marketplace. With the dong now recognized and tradable worldwide, Vietnam's economic progress can have a more direct and immediate effect on its currency's valuation. The expansion of trade partnerships, the influx of foreign capital, and the country's manufacturing output are now more closely tied to the international perception and value of the dong. This creates new avenues for investors to align their strategies with Vietnam's economic developments, allowing them to participate in the country's growth in a more direct way. The dong's journey from a locally significant currency to a globally traded one highlights Vietnam's rising prominence on the world stage and its successful integration into the international financial system. The widespread recognition of both the Iraqi dinar and the Vietnamese dong is a powerful psychological milestone for many investors. For years, social media forums and online communities have been filled with stories of people who acquired these currencies, sometimes decades ago, with the belief that they would one day be recognized globally. They have shared their experiences of monitoring political changes, economic trends, and world events, all while holding on to their currency with the hope of a major financial shift. This announcement is not just a practical development. It is an emotional and psychological win for those who held fast to their beliefs. It represents a validation of their long-term conviction and patience, transforming what was once a speculative bet into a more legitimate part of the global financial network. This feeling of vindication is palpable across online communities, where people are celebrating a milestone they have long anticipated. For many, this event marks the end of a long and uncertain journey, and the beginning of a new chapter where their investment is finally part of a more established and recognized market. The new, wider accessibility for these currencies is a tangible benefit that reinforces this sense of legitimacy and opens up a new world of possibilities. The practical implications for existing currency holders are significant. The shift to a worldwide exchange rate means that more banks and currency exchange services will handle these currencies, reducing the dependence on specialized and often less secure dealers. Previously, converting dinars or dongs could be a complicated process, but increased accessibility simplifies this and could lead to a more stable market. A wider base of participants and more robust trading activity can help to mitigate some of the extreme price swings that are common in niche markets. This new level of market depth and liquidity can contribute to a more predictable and trustworthy trading environment, which is a major benefit for all involved. However, it's also important to acknowledge that this broader exposure may bring a new kind of volatility in the short term. As a larger number of investors enter the market, trading activity will naturally intensify, which can lead to rapid price fluctuations. While this is a normal part of currency markets, especially when they undergo a major transition, it is something to be aware of. The overall effect of worldwide recognition is expected to enhance long-term stability and foster greater investor confidence, but the initial period may see some heightened activity. It's a new era for these currencies, one that balances great opportunity with the inherent risks of a dynamic financial market. For those who have held these currencies for the long haul, this announcement is a trigger for strategic reevaluation. They now face the decision of whether to sell, hold, or diversify their portfolios. Some may opt to take a portion of their gains, securing a return on their years of patience, while retaining a portion of their holdings to participate in potential future growth. Others might choose to wait and observe how the market reacts to the increased participation and the evolving economic landscapes of Iraq and Vietnam. These decisions are deeply personal and depend on an individual's financial objectives, risk tolerance, and long-term strategy. The key for any savvy investor is to balance the optimism that comes with this news with a cautious and disciplined approach. Newcomers, who are now considering entering the market, should do so with a clear understanding of the risks involved. Currency investment, especially in currencies that are undergoing major shifts, is inherently volatile. The value of the dinar and dong can rise and fall suddenly based on political news, economic data, or international events. It's important to only invest an amount of money that one is comfortable losing and to avoid making decisions based on hype or speculative claims often found on social media platforms. Diligent research and consultation with qualified financial advisors are critical steps to mitigate risk and make informed choices. Understanding both the opportunities and the potential pitfalls is crucial for anyone looking to engage with these currencies in this historic moment. Looking specifically at Vietnam, its economic growth remains a powerful force driving the dong's value. Key indicators to watch include international trade partnerships, export volumes, and foreign investment policies. Any significant policy shifts or new trade agreements could have a noticeable impact on the currency's performance. The worldwide recognition of the dong means that these domestic economic developments will now have a more immediate effect on international trading patterns and currency prices. For investors, this makes it even more important to stay informed about Vietnam's economic trajectory. Similarly, the dinar's future is inextricably linked to Iraq's economic and political stability. The performance of the currency in global markets will be influenced by factors such as oil production levels, international trade agreements, ongoing infrastructure projects, and the overall political climate. While today's news opens the door to increased trading activity and potential long-term stability, Any sudden geopolitical or economic disruption could still create volatility. Therefore, investors must remain vigilant, monitoring both local developments in Iraq and broader global market trends to protect their holdings and make strategic decisions. The balance of opportunity and risk is particularly strong with these newly recognized currencies, making careful observation essential. A fundamental principle of sound financial planning is diversification, and this is especially true in the volatile world of currency investment. While the potential for gains in the dinar and dong may seem tempting, it is rarely advisable to put all resources into a single asset class. Spreading investments across a variety of assets, such as stocks, bonds, real estate, and other currencies helps to reduce overall risk and protect a portfolio from extreme volatility. Experienced investors understand that a single asset, no matter how promising, should not be the sole foundation of a wealth-building strategy. Today's news about these two currencies should be viewed as an exciting addition to a broader, more diversified investment approach. By incorporating them into a well-rounded portfolio, investors can take advantage of the potential upside from these emerging opportunities while maintaining the stability provided by more traditional assets. A balanced approach ensures that a portfolio is protected from the inherent risks of a newly recognized market, while still being able to capitalize on potential growth. It is a prudent strategy that can help navigate the complexities of today's financial landscape with confidence. As for practical steps, investors should prioritize staying informed about political and economic news in Iraq and Vietnam. This continuous monitoring can provide valuable insights into future currency trends and help inform strategic decisions. It's also vital to track exchange rate changes regularly without making hasty, emotion-driven choices. Market volatility is a natural part of currency trading, and sticking to a clear, predefined investment plan is a key to long-term success. Establishing specific profit targets and risk thresholds in advance can help investors navigate fluctuations responsibly and avoid impulsive actions that could result in losses. Effective record keeping is another critical step. Maintaining detailed documentation of all currency purchases, trades, and sales is essential for monitoring a portfolio's performance over time and for ensuring compliance with tax regulations. Accurate records also provide the data necessary to analyze investment outcomes and refine future strategies. This disciplined approach to financial documentation is a hallmark of successful investors who operate in complex markets. These practices are especially important in markets that are newly open to worldwide trading, where rapid changes and new opportunities can occur quickly. Working with reputable financial institutions and licensed currency dealers is another essential aspect of safe investment. As interest in the dinar and dong grows, so too does the potential for fraudulent schemes. Ensuring that all transactions are conducted with legitimate, trustworthy sources protects investors from scams and guarantees proper handling of their funds. Investors should be highly cautious of anyone promising guaranteed returns or pressuring them into quick speculative decisions. Taking the time to verify information and the credibility of dealers is a cornerstone of sound currency investment. While the news is certainly a cause for excitement, maintaining a balanced perspective is vital. Today's announcement is a significant milestone for currency recognition, but it is just one step in a much longer journey. The values of the dinar and the dong will continue to be influenced by a wide array of economic, political, and global factors that extend far beyond this single event. Successful investors understand the importance of patience, thorough research, and disciplined risk management. Viewing today's development as a major milestone rather than an endpoint will help investors approach future decisions with the clarity and discipline needed to succeed. Another important consideration is how these currency investments fit into an investor's overall portfolio. For most people, investments in the dinar or dong should constitute only a small portion of their total financial strategy. Traditional investment options like stocks, bonds, and real estate often provide more stable, long-term growth and should form the core of a financial portfolio. These currencies can serve as a complementary addition, offering diversity and potential upside, but they should not replace the foundational components of wealth accumulation. A balanced approach ensures stability while allowing an investor to take advantage of emerging opportunities. Looking ahead, global financial trends and technological advancements could have a profound impact on how these currencies are traded. The rise of digital currencies, innovations in blockchain technology, and the development of central bank digital initiatives are already changing the landscape of international money transfers and currency usage. These trends could affect both the dinar and the dong over time, influencing accessibility, transaction speed, and overall market dynamics. Staying aware of these developments is crucial for investors to be prepared for both the opportunities and challenges that lie ahead in the evolving global financial landscape. Finally, international trade and evolving economic partnerships will continue to be a significant determinant of currency values. Increased trade activity and stronger diplomatic ties often lead to higher demand for a country's currency, while shifts in global economics or political instability can create volatility. For investors in the dinar and the dong, paying close attention to trade developments, government policies, and global economic conditions will be essential for making informed decisions. Today's announcement may spark celebration, but the journey for these currencies in the global market has only just begun, with success determined by a combination of careful observation, strategic planning, and patience in the months and years to come.